Whenever a problem is about to corner Elon Musk, he rarely shrinks it. He throws out a bigger one, big enough that the original problem no longer looks like a hole, but like a cost on the way to the next thing. This is his instinct. For 30 years, every time he's been backed into a corner, he's done the same thing. In technology, this instinct has saved him. The market keeps believing that with more time, he might actually turn the cost into the future. But with money, it works differently. A financial hole doesn't disappear because the box gets bigger. It only changes owners, moving on to the next balance sheet. In February 2026, XAI was folded into SpaceX. This was no small thing. XAI posted about $6.4 billion in operating losses in 2025, and another $2.47 billion operating loss in the first quarter alone. That hole wasn't filled. It was moved into SpaceX. Now the books hold a profitable Starlink, a mature Falcon launch business, a cash-hungry Starship, and a deeply unprofitable XAI. Put together, SpaceX posted a net loss of $4.94 billion in 2025 and another $4.3 billion in the first quarter. 4 months later, on June 12th, SpaceX went public, priced at $1.75 trillion and trading past $2 trillion on its first day. He didn't fill the hole. He moved it into a bigger box and sold that box to everyone. This isn't just a financial maneuver. It's his instinct landing on money. Change the arena, make the old problem look trivial. And going public still isn't the end of the chain. The media and SpaceX's own executives are fueling one question. Will Musk use this richly valued stock as currency to swallow Tesla, forming an entity worth around $3.4 trillion? It's still just talk, but it forces a sharper question. You can believe in his technology, believe he might deliver that future, but before he does, what is he really trying to cover? To understand this move, you have to see what cornered him. 3 problems, none of which could wait. First, private funding was running thin. XAI alone was running losses at a near $10 billion annual pace, and Starship still needed billions more. Only a handful of private investors can write checks that big. Each round pushed the valuation higher, and fewer were willing to buy in. Meanwhile, early investors who'd been in for years wanted a way out, and the cleanest, largest exit is going public. The private pool could neither fund the machine nor give old shareholders the exit they wanted. Second, XAI itself is a hole that can't be filled. Over $6 billion in losses in 2025. That has to go somewhere. Third, Tesla's profits can no longer support its stock price. Tesla does make money, about $500 million in net income in the first quarter of 2026, an annualized rate near $2 billion, but it's valued at $1.5 trillion. That's the market pricing it at over 700 times earnings, while an ordinary car maker trades at 10 or 20. Those extra hundreds of multiples aren't buying today's Tesla. They're buying the story that it becomes a robotics and self-driving company. The day the market stops believing that and treats Tesla as just a high-growth car company, even a generous 20 times earnings multiple would require around $75 billion in annual profit to support that valuation. Nearly 40 times what it earns now. That gap is filled by narrative. None of the 3 could wait, and conveniently the IPO market was warming, AI valuations were hot, and he held Starlink's cash flow and the credibility his rockets had earned, both the window and the means. So he did the most Musk thing imaginable. He moved XAI's hole into SpaceX's consolidated statement, blending Starlink, Starship, and XAI into one financial story. Then he priced that box at a record high and took it public. Once that richly priced stock holds, it earns the right to become currency and swallow Tesla. But Tesla is worth $1.5 trillion. To buy it with stock, the currency has to get even stronger. So within days of the IPO, SpaceX announced an all-stock deal to acquire Cursor's parent company, another future story added to make the box bigger. At its best, what does this look like? A giant entity where one man holds roughly 85% of the votes, and outside money is locked into a single point no one can see into. Not that it skips its filings, but once Starlink's cash, XAI's losses, Tesla's valuation, and Musk's votes are welded together, you can see the numbers, yet can't pull apart who creates value, who consumes it, and who's covering for whom. And the real danger of this instinct is that it can't stop. The higher the valuation, the bigger the story it needs. And his story is always the next bigger promise. After Starlink, Starship, after Starship, AI compute in space, then Mars. Each one is harder to verify than the last. And the harder it is to verify, the higher the valuation it can carry. That's one force. Here's the other. Each merger lets the last round of investors cash out through a bigger box. So two forces push him at once: the valuation he wants, and a line of capital behind him waiting to exit. It can't stop. But the day the market prices it on cash flow instead of vision, the story breaks and the whole machine stalls. And the first one this fire reaches is him, the single point holding the giant up, the one who lit it. But he won't burn alone. NASDAQ changed its rules this year. A qualifying mega IPO joins the NASDAQ 100 just 15 trading days after listing. Once it's in, every fund tracking that index has to own it, mechanically by rule. And behind those funds is your retirement account. You never placed a bet, but the rules already put your money on the table. You can see the same move repeated 3 times. In 2016, Solar City had been losing money for years, about $770 million in 2015, close to $1 billion in 2016. Musk had Tesla, which he controlled, step in and buy it, a $2.6 billion stock swap that moved the whole onto Tesla's books. Solar City's losses, debt, and integration risk were all pressed onto Tesla shareholders. In 2022, he bought Twitter for $44 billion. Advertisers fled, and later Fidelity's marks at one point implied X was worth barely $12 billion. Then in 2025, he had XAI acquire it, using a hotter AI story to lift the shrunken asset back to a $33 billion equity value. The third time is today. XAI folded into SpaceX, taken public with the hole still inside. 3 different boxes, one hand, one move. Take a hole that can't be filled and move it into the next larger box. In fairness, Musk's record on delivering technology is strong. Reusable rockets, which the industry called impossible, he bet and won. The Model 3, when Wall Street bet on bankruptcy, he bet on production and turned cash flow positive. Starlink, once dismissed as a money pit, is now SpaceX's profit engine. These are all real, and precisely because they're real, the worry is complicated. Not because the dream isn't worth believing in, but because the risk might crush the dream before it arrives. You may have never bought SpaceX on purpose. You just put money into your retirement account every month, into that same NASDAQ 100 index fund. That index already holds Tesla at a weight above 3%, along with a long list of companies whose valuations rest on AI, chips, cloud, self-driving, and future platform stories. The top 10 names already make up nearly half the fund. If SpaceX is added, even if its weight isn't full at first, because so few shares trade freely, it pushes the index further in the same direction, more concentrated, more dependent on the future paying off. So the real risk isn't one more name in your account. It's this: the moment the market starts doubting SpaceX, too slow to deliver, burning too fast, valued too high, the question stops being whether SpaceX is worth $1.75 trillion and becomes whether all of these AI, self-driving, cloud, and chip stories are worth what they cost today. You thought you bought a diversified index, but inside it, more and more weight rests on one belief: that the future will arrive, and arrive fast enough. So how do you tell whether it holds? Watch 3 things. First, watch whether the people who know the most stay or run. When the lockup lifts and early investors can finally sell, do they rush for the exit or hold? Second, watch the gap between the market price and Morningstar's fair value estimate. Before the IPO, Morningstar put SpaceX's fair value around $780 billion against a listing near $1.75 trillion. The wider that gap stretches, the more the market is pricing on story. The moment it narrows, someone has begun doing the math on cash flow instead. Third, watch whether the price holds the day bad news arrives. This machine runs entirely on the next bigger story, so the real test is the day something punctures it. Another missed timeline, a quarter that loses more than expected. That is the real test of faith in the future. When bad news finally lands, does the price hold or does it give way? His ideals are real. Rockets, cars, Starlink. He built them. They aren't a front. The question is the way he reaches for it. Each time a problem closes in, he throws out a bigger one and presses the old debt into a new box. He's betting on time, betting the future arrives one step ahead of the hole blowing open. That bet might actually win. It's just that this time the people at the table aren't only him, they're also those who never placed a bet and have already been put in the box. If you think I got a link wrong, tell me in the comments. I read everyone, and if you want to see the next character engine taken apart, subscribe.